It's been a very eventful 6 months is what I would say as the India CEO. There is no other bank in the planet which have presence in 95 countries across the world.
How is Citi in India or using AI?
How AI can actually help, one, in streamlining, two,
At a global level, how is all this adding up to cost reductions?
it's a big theme that our CEO is personally involved. Even in other parts of Asia, our penetration is much lower in most of the products. As a bank, we will not be able to own everything and anything that happens in the country. So we actually work with fintechs, our position versus what is happening in Hong Kong and Singapore. Innovation and invention that is happening in the space is next level.
We are delighted to welcome K Balasubramanium, head of Citibank India. Bala has been a Citi veteran for close to 30 years. Over the years, India has been increasing in importance for Citibank worldwide. In fact, the country figures among the top 3 to 5 in most businesses worldwide for Citi. Joining me is my colleague, Moneycontrol's banking editor Hamsini Karthik, who I'm sure is going to ask a lot of difficult questions. But Bala, let me start with the general, lots of action on the macro front. I mean, starting from GST rate cuts, which came into effect on September 22nd. There is obviously the overhang of tariffs and their impact. So how do you see the Indian economy right now, from your perspective?
Sure. Thanks a lot for having me with you today. I have to tell you that we potentially are in a very good position. It's been a very eventful 6 months is what I would say. It started with, that's the time that, I moved into this role and as the India CEO. It started with the border skirmishes with Pakistan. And then, we were hit with the post-Liberation Day event in terms of, the tariffs. And then there were market upheaval that, we saw in terms of, the FIs pulling money out of the country. So a lot of stuff happened in the last 6 months. But the good thing is, the core fundamental economy continues to be doing quite okay. And if you look at the GDP numbers that came in for Q1 FY26 as well as Q2 FY26, it continues to be quite positive. I think the manufacturing sector continues to be okay. Services is doing exceedingly well. Some of the newer segments like GCCs, etc., has started to deliver way above weight, which is all contributing very positively to the Indian economy. And the basic consumption story continues to be quite strong. The GST cut that happened effective 22nd of September has been a game changer because this is something that the market was expecting for a reasonable period of time, and thanks to the PM and the government, that we actually made it happen before the festival season, and you can't have it at a time better than just the start of the Shera. Right. And if you look at the last 2 weeks, I think, and I've been talking to clients across the spectrum, be it consumer durables, be it FMCG, be it automotive, there is a general sense of positivity in terms of the activities that we have seen in the last 2 weeks. So, which again is very good because we have had a very good monsoon, which is actually quite a lot, and it is well spread across the country, which then means that the rural economy should also start seeing a lot of cash flows in the system. So overall, I think as I look at FY26 today, based on the tailwind, the government actions, as well as thanks to the nature, I think we potentially will be in a good position between 7 quarter GDP for sure for FY26. So I'm quite positive in terms of the way things are. US trade tariff deal, I think it's been unfortunately a little bit of a slow burn. There is a lot of effort that is being put up by the government, and I hope that there is the light at the end of the tunnel sooner than later.
So the overhang is really the uncertainty is only tariffs, really speaking.
Now,
if that were to come down to, let's say, 15-20%, then the clouds would really lift.
Yeah, at 50%, frankly, which is the tariff that we have been hit with for the last more than a month or 6 weeks or thereabouts.
A lot of sectors are exempt, like pharma and so on, but it's generally 50% for some of the labor intensive.
I was coming to that. We have done a lot of work on this space, Bodhi. If you look at India's exports to US, that's approximately around a zip code of $85 billion or thereabouts, right? And of which close to 40% of the exports are not going to be covered under tariff. Because this could be electronics, this could be pharmaceutical products, and this could be some of those exempt category items which are not covered under the current tariff. So we're basically looking at 60% of the products that is actually going to get covered under the tariff. And those 60% of the products, at least for calendar 2025, FY 2026, we have seen a lot of front loading of sales that has happened, right? So therefore, if you look at the corporate results that is going to come out through this year and into FY 2026, I don't think there is going to be significant impact. But if this tariff continues to be at 50%, unfortunately for the 60% of the product, that's actually going to make us very uncompetitive in the market. And the sectors that are actually going to get hit quite adversely are textiles, footwear, handicrafts, gems and jewelry, and a few others, right? And the government is basically trying to see whether by reducing the GST, some of it could be moved into the domestic market or could be considered for export into some of the alternate markets in EU and other places. But this is something that is going to actually play out over the next few weeks and months.
Right. Thanks. Hamsini?
Thank you. I'll start with a lot of green shoots or positives that we're seeing internally in India. One of the spaces which is now opened up for the banking sector directly to get into is that of acquisition finance. At Citi, how do you see opportunities here? And do you also expect that private banks and some of the large PSUs could eat into what was exclusively known to be your domain, foreign banks' domain in India for a long time?
Frankly, Hamsini, if you ask me, the market has to provide a level playing field to all the players, and everyone has to win their business based on their core capabilities and their merits. So, I think it's a great idea to open up this particular space that you talked about, domestic acquisition, to every banks. Now, if you think about it, it is actually going to be better for the entire ecosystem, because as access to capital becomes easier, cheaper, and more prevalent, I would think that the amount of transactions that is going to happen in the country is only going to go up, which then means that there are going to be more players, but there are going to be more opportunities, and we all can participate in the opportunity that is going to come up. And again, one thing that I'm a firm believer is in the last, I think ever since COVID, in the last 2-3 years, there is a big reshaping of economy that is happening on the mid-corporate and the SME side. The second, third generation probably are not very keen to continue what their parents and grandparents were doing in the businesses, right? They probably want to branch into some of those new age businesses and stuff like that, which then means that there is always going to be opportunities for acquisitions in the domestic market. We've all seen that, private equity is sitting on huge pots of capital, and they have been pretty active in India over the last several years. And with the change that is happening in terms of opening up of banks into that space, there is even going to be domestic consolidation that is going to be the theme that is going to play out. So we frankly believe that, it's actually good for the market. It's a good opportunity for all the banks that is operating in the country. And there are new pools of liquidity that is going to be available, which will further leapfrog some of these transactions.
Have you done any internal math on how big you'd like to see it as a business vertical at Citi India just yet, or it's too early days, we need to wait out?
You're talking about only the domestic bit?
The domestic bit.
See, we are always talking to our clients, both in India as well as potential suitors who are basically looking at acquiring companies in India. This could be financial players like private equity, etc., or it could be even strategics, which will actually come and look at opportunities in the country. So that's an ongoing effort that we keep putting on, because we today we bank more than 7,500 clients across the spectrum, and so we have a very good pulse of what's happening in the market, and we are constantly evaluating in terms of which are the industries, which are the companies, which are the sectors where potentially there could be consolidation and there could be opportunity for growth, and we are always showing opportunities both to the Indian companies as well as offshore companies which could be interested in these spaces.
Great. I'll stay put with that and lead on to a segment which is shaping up very interestingly for Citi. You I think you've topped the league table there on investment banking. That's also a meaningful part of your overall revenue streams as well. How are you viewing the entire deal activity in the country right now? We've had a very busy season, just starting Navratri and even into Diwali. We saw a bumper listing in LG as well. How are you seeing the deal momentum shape up in the country?
I think it's a good question. 2024 was a good year for us from a capital markets perspective, and we thought that 25. We hope that it's going to be the same. But frankly, if you ask me today, based on the deals that have happened in the last 9 months, and more interestingly, as you said, the pipeline that I'm looking at between now and end of the year, and even into the first half of 2026, I can't ask for anything more or better, right? Because the market continues to be quite constructive. We are seeing a lot of interest coming in from international investors, as well as, of course, the large asset management companies in India. They're sitting on piles and huge amount of cash. They're all looking for opportunity to invest. So it's a great match of demand and supply. And that's one of the reasons why we are seeing a stream of IPOs that is happening. You rightly said that in the last 10 days, we saw 2 big listings happening in the country. We were actually there in both the deals, Tata Capital as well as LG Electronics. And if I look at between now and the next 60 days, that is till December 15th, because typically the last 2 weeks are slow, I would not be surprised if we see another $10 to $15 billion of capitals being raised from the market, assuming the market continues to be constructive. The good thing is we are seeing some bit of activity with foreign institutional investors coming back to the market since early October. And for the first time in the last 12 months, the Nifty has already touched 25,700, which is the last time we saw that number was in October 1, 2024. So I think the tailwinds continue to be pretty strong. If I look at the pipeline of deals that we are working on, we at least have 2,000 deals that will go into the market between now and first half of next year. So I can't ask for anything better than this.
You're talking about possible IPOs.
Yeah, that's right. That's right.
So, so one sector which has seen deals is the banking sector. I mean, there is obviously a big investment, possibly in one bank from a Middle Eastern bank, which has been in the public domain. There's obviously the investment by a big Japanese bank into Yes Bank. Now, from Citibank's perspective, is there any, if there were to be acquisition opportunities in India, which there does seem to be, would you be interested?
That's a good question. So before I get into what's Citi's strategy, we have been involved in the SMBC acquisition of Yes Bank in India. We were actually advising Yes Bank in that transaction.
Right.
We were also recently involved in IHC Capital, acquiring in Samman, which is the erstwhile NBFC in the country. And
that was another big one.
That's another
big
one.
Yeah.
And if I look at least discussions that are happening, that sector continues to be quite active. And not to forget that State Bank of India did a very large QIP of 25,000 crores, the largest in India, sometime in July of this year. So that sector is quite active. Specific to Citi's position, I think we just divested the retail bank in India.
Right, yeah.
And we have basically doubled down our focus on the institutional side of the business. And if you look at the various pillars of the institutional side of the business, I think we are in a very good shape in terms of our market share in each of the verticals that we are in. Our plan in terms of what we want to do in each of those segments, and which is the client segment that we want to further grow, and which is the client segment where we want to deep dive. So at this point in time, in India at least, we are not looking at any horizontal expansion. We are basically looking at more vertical expansion in terms of trying to go deeper into our existing business lines and trying to see how we can get more and more of the market share.
Right. So you don't really want to get into the weeds of Indian banking, as it were. I mean, the IDBI Bank, which is the next big one coming up. I mean, you're not looking at that kind of opportunity.
But retail is something that we exited.
Yeah,
and,
that's right. So logically,
you will not get. India doesn't have a pure play institutional bank.
That's
so therefore, with that perspective, we are rather better off in our vertical strategy than look at more horizontally.
Yeah. Since you brought up, you would have faced a lot of let's say customer feedback on the retail divestment, and there were also some questions about Citi's commitment to India, which had been raised around that time. Do you think you're over that phase in terms of
Absolutely.
of the stakeholders accepting that you're committed to India?
See, as you said, I've been in India for a large part of my life, except for the last few years when I was out of the country. And when I speak to clients, the initial phase is always that, because everyone had the first credit card from Citi, or they had a bank account with Citi for ages. So there is a lot of positivity and a lot of affection to the Citi brand.
That's right.
But I think as you start thinking rationally, and which is what all our clients are, they understand the reason why we wanted to move away from the retail play. Because as a foreign bank operating in the country, it's very difficult to be playing a retail game similar to what State Bank of India or any of the other private sector banks are playing. So therefore, it's just not feasible from a long-term perspective. So I think clients do agree and understand that, and I think we have moved past the phase. Now, if I look at some numbers that I wanted to share with you, it's been a little over 2 years since we exited totally from the retail bank. March 23 is when we did LD2, which is basically the legal D2 that we handed it over to Axis. And it's been more than 2.5 years that we exited. Our balance sheet continues to grow quite well, 35% growth in the balance sheet, despite the fact that we don't have retail. Our profitability continues to be very strong. Our revenue lines are going quite well. And even in the first half of, because my March 25 numbers are there in the public domain, so you can have a look at that. Even if you look at the first 6 months of this fiscal year, starting April 1, 2025, I think our revenue growth has been on the double digit, and our profitability this year is again going to be better than what it was last year. So we are actually doing quite well in the institutional business that we are playing.
Right. So something like the wholly owned subsidiary route and so on, which might, that is not really something that would interest Citi at this stage.
At this point in time, see, again, we evaluate all possibilities and options that is available to us.
Sure.
And at different points in time, different things make material sense. But the business model that we are in today, where we are a full service institutional bank to our clients, I think there is no significant advantage of becoming a WOS versus a branch operation. So at this point in time, I think we would continue to be more like a branch rather than a WOS.
Right. You are a huge investment bank. You are a huge custodian. I think you are the...
We have a very large custody share. Yeah. We have got something like 35% plus of the custody share in the market.
You probably have the top market share in
We are the number one in the market, yeah. And we are also number one in the multinational space.
Right.
Where multinationals coming in and doing business in India, we have got again more than 23-24% market share in that.
What about your relationship with the Indian top corporates?
Very, that's a good question. And I think we have created a niche for ourselves in that. Pretty much every large corporate that you can think about which is operating in the country, we obviously bank with them. We take care of their funding needs. We take care of their both organic as well as inorganic growth strategy. And besides that, in terms of daily operating flows, globally, we move between $4 and $5 trillion of cash across all the countries in the world. In India, also, we have got more than 4% share on the digital payments that happens in the country, which is basically helping all the large corporates and others in terms of moving cash. We are pretty large on the trade side, where we have close to 8% market share on imports and exports, and we pretty much deal with almost all the large corporates in the country in terms of their import and export needs in India. And then we have got close to around 14% market share on the FX. Again, we help companies risk manage their positions across multiple currencies. And the other niche that we help large corporates is a lot of the Indian conglomerates have operations not only in India but across the world. Now, through our network, where we are present in 94 plus countries, we basically offer our network for banking them in all their offshore jurisdictions. I think that's where we have a big advantage, because if you're going to Africa or if you're going to Latin America, and of course Europe and America as well, there are not too many banks which will be able to offer the same level of services that you are experienced in India in those markets as well. We have a very robust multinational banking segment called GSG, through which we support their operations in international markets. So large corporate is a very important piece of the puzzle, which we are very focused on, and we want to actually put money in that business and grow that business.
Cool. I'll take it from your point on large corporates. We recently saw that RBI easing norms on single borrower exposure and stuff like that. And we've seen a slew of other measures prior to this, which are nudging, even from the government's end, nudging capex in the country, and also loans to large corporates. Do you see a revival of that happen? We've not yet seen a convincing, direct borrowing uptake happen in the space. Do you see that we are at the threshold of that yet?
Yeah, I think regulatorily there is a circular that has come out in early part of October, where after a very long period of prudential tightening of norms, the regulators have started to, I wouldn't say relax it, but making it a little bit more flexible. And that's primarily because if you look at the bank's balance sheet, not only ours, but I'm seeing across the street, I think the balance sheet continues to be like, very, very positive. Capital adequacy is strong for almost all the banks that is operating in the country. If you look at some of the other metrics like LCRs and NSFR and all those metrics, I think those all continue to be in a positive territory. So today, we are not haunted by those NPA problems, which was a big thing in the period between 2012-13 all the way into when we went into the COVID, right? So things are in a much better shape. So RBI is also getting a little bit more positive in terms of like, trying to open up that space. Lending norms for large corporates have eased quite a bit. The capital requirement from an RWA perspective has again improved substantially, which then means that in a way, banks will be encouraged to lend money to corporates for their organic and inorganic growth needs. The capex that you talked about, I don't think it is a desert to say, because there are pockets of opportunity that corporates are looking at. If you look at renewable energy space, I think it is at a breakneck speed that things are happening. If you look at the infrastructure space, again there is a lot of work that is happening, including real estate, because these are two hand in hand that is like going. And then if you look at some of the new sectors that is emerging, be it battery, be it semiconductor, be it electronics. Now the capex that is required in these segments are not like putting up a steel plant or a cement plant, right? The type of capex that you need is very different. But then there is still investments happening on that space. We recently signed 2 weeks back a deal with PFC for $200 million, the first deal that we did with them, where we are getting Australian agency to participate in their growth towards green energy. And this is both for transmission lines as well as for generation of green energy. So there is a lot of stuff that is happening. It may not be getting those banners like, putting up a big steel plant or a cement plant, but capex is happening in a very different way across the country. Data center, another big area that, there is, as I talk to you, we are right now working on several situations where Google, for instance, is talking about a $10 billion investment. Microsoft is talking about $3 billion investment. These are all capex that is happening in the country, right? Some of it is going to be equity funded, some of it is going to be in the form of financing that is going to happen in the market. And even if you look at some of the large corporates, Indian large corporates, every large conglomerate has a data center strategy, has a strategy in terms of like, how they need to accelerate into new energy and new businesses. So I think there is a lot happening on that front as well. So I will not say that, there is absolutely no capex happening. It may not be those big ticket that, we are used to in 2000s and 2010s. It's a very different form of capex that is happening today.
How then should I understand that sustainability as a piece should be for Citi? Because this is becoming a buzzword even for some of the large private banks. The pricing is also apparently a little more attractive there versus the routine products, is a feedback that I often get. For SBI, India's largest lender, they're again focusing a lot on sustainability. If I look at foreign banks like Stancy or DBS, it's becoming an important piece. How are you looking at sustainability financing in Citi?
So I'll talk about what's happening in the US and then I'll talk about what's happening in the country. Our global CEO, Jane Frazer, she went out and made a statement back in 2022 saying that Citi is actually going to invest $1 trillion towards ESG, 50% of which is $500 billion towards environmental activities, and the other 50%, which is another $500 billion through social and governance activities. So that's a very big number to be done over a period of 7 or 8 years till 2030, right? India is actually right and center in terms of the entire piece. We have a book of around more than $2 billion, which are ESG related, right? And we are actively involved in helping clients to basically assist them in terms of their ESG journey. The PFC transaction that I talked about qualifies under ESG. There is a very large transaction that is still in the private domain on a metals sector, where we are again looking at doing more than $500 million plus of financing for that. So this is actually front and center. We are engaged in terms of putting our own balance sheet to play, as well as we are working with multiple agencies. And there are development financial agencies across the world, mainly in the Europe and Asia and Australia, which is actively involved in working with us and other banks, of course, to basically try and address some of these needs.
Perfect.
So you aren't stepping back from ESG, which a lot of US, because of political changes in the US, many US corporations are not really that keen to talk about ESG any longer.
See, frankly, if you think about it, in India, ESG is not good to have, because the location that we are in, for us, climate transition is an absolute necessity. It's not a hobby, right? So therefore, focus on renewable energy is going to be bread and butter for us. It is not that we may or we may not do it, and that's one of the reasons why it is a centerpiece for our
is now in renewable energy.
Sorry,
our capacity addition these days more
100%,
than 50%
right?
is renewable.
Absolutely, because already we are more than 51% of our generation through renewable.
Absolutely.
And if you look at the roadmap between now and the turn of the decade, there is only going to be from existing 220, 230 gigawatt capacity, it is going to go all the way up to 500 gigawatt capacity, right? So which then means that every conglomerate, every corporate is basically putting this in the front and center in terms of their business strategy. And as a bank, we cannot just ignore that. So therefore, there is an economic rationale as well as a ESG rationale for us to do it, and there is money to be made on that space.
Perfect. I'll just pick on the point where you mentioned about helping your clients with payments, remittances, etc. This is again a area where a lot of the foreign banks, like even HSBC, etc., they're investing a lot into it. What is your thought process in Citi around these two businesses particularly?
I think this is core. This is like oxygen to a human being. Payments is becoming
but it's also a very fought out business among private banks as well. PSU banks are also heating up the space. So how do you see, where do you see Citi's right to play in this particular segment?
See, I think if you think about it, we exited the consumer bank, but we still have a disproportionate share on the B2C segment, because pretty much every large company that operate in the country, be it Indian conglomerates or multinationals, which has a B2C segment, banks with us. So therefore, in a way, we have to constantly invent and invest in the payments and digital landscape that is evolving in the country. I think our approach right from the start has been very clear. As a bank, we will not be able to own everything and anything that happens in the country. So we do a partnership approach. So we actually work with fintechs in India, globally, in terms of trying to empower and enable them. And we partner them in terms of co-creating structures which could be of value to our customers from an end-use perspective. And what it brings to the table is resiliency, and it also brings to the table simplicity and alacrity to delivery, which frankly, for a bank like us, it could take some bit of time. But the moment we test a fintech and we understand and appreciate their capabilities, we will onboard them and we will start co-creating solutions for our customers. So we do this quite extensively. The second thing that we do is we have this entity called Citi Ventures, which is based in the US. They, along with our partners in the payment space, we always look at opportunities to invest in some of these entities. So we've invested. So we every year we run this 2-day symposium where we ask fintechs to come and present to us, look at various solutions, look at developing technologies that is emerging in this space, and then we pick up 3, 4, 5 of them where we can actually work together more from an investment perspective, and then we start helping them in terms of their journey to further scaling up their client business. So there are multiple models that we have in terms of how we are penetrating the market on the space.
What's exciting you right now in India as a theme in this particular aspect?
On the payments?
On the payments.
I mean, I was there in the GFF that happened a week or 2 weeks back. And I think the energy that I saw, and I've been to the GFF in other parts of the world as well, including Hong Kong, Singapore, and the San Francisco. The San Francisco one is really good. But frankly, if you ask our position versus what is happening in Hong Kong and Singapore, I can say that we are cutting edge across this part of the world. I think the enthusiasm, the energy, as well as the innovation and invention that is happening in the space is next level. And these are young people who have brilliant ideas. You go to them with a problem and they will come up not with one solution, with multiple solutions to address your problem. And as a bank, we actually never compete with them. We partner them in terms of trying to co-create solutions which can then be given to our customers.
I'm just going to take on a point which Bodhi mentioned about, setting up as WAS, etc. We might be seeing a Japanese bank, taking over a large private sector entity. There's money apparently spoken about coming in from Middle East, which will directly start working in India. These could have been pockets for global banks like Citi, Standard Chartered, where you dealt with directly. Now, there are banks of those countries, of originating from those countries coming in here, so they may take a slightly, higher preference versus global banks. How do you see the competition terrain, therefore moving in India?
See, frankly, if you think about it, the biggest advantage that we offer to our client is a network. Because there is no other bank in the planet which have presence in 95 countries across the world. And this includes countries in Africa, this includes countries in Latin America, and even Eastern Europe, where Citi is dominant, right? So that's a big differentiator for us. So for instance, if UPL wants to get into, when UPL went and bought Arista, this happened in 2019, we were a banker to Arista already in some 30 or 40 countries. So it was very natural for us to, have a honest conversation with UPL and say that, how can we come together to basically expand our relationship with UPL into the Arista relationship. So the execution was absolutely seamless, right? Similarly, I can keep on giving so many examples. Nestle, which is a global company which has presence in different parts of the world. I mean, the reason why they bank with Citi is because they have access, ability to move money, etc. We offer, which no other bank will be able to offer. So the network is a big differentiation, and I think increasingly what we are trying to do is we are trying to use our network to get more and more into the easier markets of Europe and US.
So you see the pie only expanding and not getting eaten?
I'm quite, and if you look at our growth, I'm coming back to the growth that I talked about. The last 5 years, our growth rate has been, in dollar terms, 12 to 13%. And if I look at the opportunity, India business. If I think about the opportunity between now and the next 3 to 5 years, I really don't see a reason why I should not be growing in that similar zip code going forward as well.
And tell us about Indian business. How big is it in a global context?
That's an interesting question. If you look at India is, I think, very, very critical to our global CEO. She's personally taken responsibility and accountability for India, and she is in India once a year for sure. She tries to come twice a year. She's meeting customers actively across the world, Indian customers across the world, and she's just a phone call away in terms of asking for assistance, etc., etc. That shows the importance of India to Citi in terms of the outlook as well as the growth path that India can provide. So we are getting a lot of support from the CEO as well as the executive management team of the CEO in terms of asking for investments, asking for assistance in terms of any client situations, etc. The other thing that I want to tell you is 3 of the EMT members, the executive management team members who are part of Jane's core management team are Indians. In a way that basically helps us, 3 out of a total of around 14 or 15, right? So that actually helps us a lot in terms of getting the necessary share of attention into India. And in terms of if we continue to grow at the pace that we grew in the last 5 years and what I talked about for the next 3 to 5 years, I wouldn't be surprised that we will be between 3 and 4% of Citi's overall top line, and maybe a little higher on the profitability.
And how does our size compare to, let's say, China or Brazil?
We probably are going to be in the same zip code, if not a little higher.
Okay.
But think about the size of China as a GDP versus us.
GDP is 5 times more than us. I just want to come back to something you referred to, Google's 10 billion investment, which was announced, investment by Microsoft in data centers. In what manner is Citi involved in these investments, or would you be in terms of the financing?
So I think we work a lot with some of these companies. And I'm not even talking about only Google or Microsoft. In general, I'm saying. So when a multinational comes into the country, I think we are typically the first port of call because one, they bank with us in whichever market that they belong to. And the fact that, when they are coming into an emerging market like India, they know that there are several regulatory hurdles or regulatory aspects that they need to pass through. So we become an advisor to them in terms of how they need to manage the entire life cycle of an investment. Then we help them in terms of getting them the right advice, i.e. from a banking perspective. We help them in terms of the risk management, capital movement coming into the country, and even investment ideas in terms of how they need to manage the capital. And in the entire journey, we help them with regulatory advice as well as any ministerial and government advice that we could provide. So there is a lot of work that we do with them as companies look to come into the country.
Okay. So I think an interview would not be complete without some reference to artificial intelligence. So I just wanted to ask you in terms of how is Citi in India or even world using AI across its businesses?
We have a CSC which we call it a Citi Service Center. Now we have got something like 33,000 people working in the CSCs, and they support.
That's your GCC, essentially.
That's the GCC. That's right. And we were a real early player into this space. We started our GCC back in 1990 when the concept of GCC was not prevalent at that time. And our 33,000 colleagues, which are part of the CSCs, they support more than 80 countries of Citi globally, right? And in my last 6 months in this role, I visited Chennai, visited Mumbai, Pune, and Bangalore. And I can tell you that there are several of the colleagues who actually have created their own patent on AI in terms of processes, in terms of some of those co-creation that they are doing in terms of efficiency and stuff like that, right? So there is a lot of work that is happening on AI. And if you look at the 33,000 people, close to 50% of them are doing really high-tech stuff, which includes big data, which includes AI, which includes analytical stuff, which will be futuristic in nature in terms of how to use data to do targeted marketing and stuff like that. And then machine learning is happening in a very big form. So there is a lot of work that is happening on AI and ML in the CSCs, not only for India business, but across the world. Coming to India, I met Citi's Chief Technology Officer who was in India 2 weeks back. I talked to him about the work that we are doing in the bank in India, where each of our 4 business lines have identified critical unstructured processes that is being followed today, which at times would also be touching clients to try and see how AI can actually help, 1, in streamlining, 2, in removing some of those maker checker, etc., which is very prevalent in manual processor, and 3, better time to market. So there is at least 43 or 46 use cases that are under different stages of creation, which once it is ready is all going to be rolled out for better efficiency and business translations.
At a global level, how is all this adding up to cost reductions for you? Because
it's a big theme that our CEO is personally involved. She is driving this at the EMT level, and every EMT member has been tasked in terms of identify the top 5 problem areas or areas where they believe that AI can be used in a significant manner to roll it more from an efficiency perspective, as well as getting more business and faster access to clients. So there is a lot of work that is happening on AI.
And how big would India's contribution be in terms of GCC from a global perspective? You have about 33,000 employees sitting out of India for the GCC. So how big would India count on that?
That's a good question. As you know, Citi is in the process of divesting Banamex. Yes. Post the Banamex divestiture, which should happen sometime in 2026, India is going to be the 2nd largest employee base for Citi after the United States. So that shows that, and we are still adding more people. So that shows the relative importance of India compared to other markets within the Citi world.
Just one last question from my end, Bala. We've seen in the US and in the Europe, also in Switzerland. Switzerland is a slightly different kind of an exception, which call for higher risk weight versus the other countries. A lot of regulatory changes are happening to propel credit growth. Vis-a-vis these changes, how are you seeing Indian markets? We've also gone through some changes, but if you want to compare India versus the rest of the world in terms of regulatory train, making it easy for banks to do business in the country, how are you seeing India versus the rest of the country?
As I said, the last 10 years, we have seen a lot of potential tightening of banking regulation and norms. That's because what we went through between 2010, 12 and all the way into 2019. And rightfully so, because the cleanup had to be done and it took whatever time it took to get it done. And then COVID happened, again, things got a little disarray. But then the good thing is, in the last at least 12 months, I genuinely believe that, the regulators have started appreciating the fact that it is time for us to relook at some of those regulations. And the October 7th circular is a great positive momentum that, we are seeing. So things are definitely easing up and looking better. We are having constant discussion and dialogue with the regulators. And normally it's a very constructive dialogue. And if we're able to make our case properly, I think we get the right solutions.
Foreign banks in particular were called for a meeting recently with the regulator. Is there something that you'd want to sort of share with us today?
I cannot. That's going to be no. It's nothing specific, but I think it's basically, see, we are very small in the Indian context. If you look at the size of government banks and private sector banks, we are like 5, 6, 7%. But then the fact is that, despite we are 5 or 6 or 7%, we bring in a lot of value to the system in terms of mediating capital flows, bring in digital capabilities, providing risk management solutions. And I think the regulators understand and appreciate that. So the need for the foreign banks versus the other segments are very different. And therefore, there is always these meetings that we do with regulators where we put across issues and concerns and opportunities that we see from our lens, which I'm sure regulators know, but it's always better to bring it to them once in a while.
No, just one last question from my end. I mean, you of all the businesses that you're in, corporate, commercial, investment banking, the transaction, the custodial service and all that, which is the most which do you see as the most promising?
See, I think every business has its own time under the sun. Right now, if you think about it, investment banking is doing exceedingly well because the capital markets are very constructive. Right. India still continues to be in a good position in terms of attracting foreign capital and also domestic capital. And there are companies which have created a niche for themselves. They are all trying and see as to how they can access money for growth or providing liquidity to their existing investors. So I think that trend is going to continue. The second thing that is playing out in the market is growth is a big driver in the Indian market. And if you think about it, we are 1.4 billion in terms of population. And we still are going to grow at least for the next 10, 15 years, where we will peak at 1.7 billion before we start reducing, right? Which then means that any global company which has ambitions to grow cannot ignore India market. So therefore, every company is basically trying to see as to how they want to come and participate in this journey. Companies which have already done this are in a great position. We saw Hyundai happening last year, Maruti happened a few years back, LG is happening today. And there are at least a dozen plus companies which are in different stages of discussion with us and other banks as well, in terms of how they can try to monetize some bit of the value that they have created in the market. You saw the market cap of LG post-listing. Yeah. See the size of the parent and the size of
Did
India
it surprise
operation.
you?
We knew about it. Okay. Because, it's not the only one. Hyundai happened the same way.
Sure.
But are these valuations justified?
As long as growth is there, yeah. I think you can. The reason why
the valuations are happening because some investors believe them to be so. But are they from a?
Don't get colored by what has happened yesterday and today, right? Because if from a sequential perspective, if you're seeing that growth is going to be the driver, and I frankly think that that should be the case, right? Because demographics are in our favor. GDP is, per capita income is raising. People are getting more and more connected to the world, and therefore, the ambition levels are raising, which means that consumption is going to be a continuing theme that is going to play in this country. So therefore, every company has that opportunity, and still, if you look at India versus, forget about developed markets, even in other parts of Asia, our penetration is much, much lower in most of the products, which means that, even if you're putting a small multiplier, this growth is something that is got to stay. So therefore, I'm frankly not surprised with the way the valuations are. That at times even I get worried about the frothiness in the valuation, but there is a fundamental justification as why we are getting valuation. So that's another bit that is going to continue, because M&A is going to be a continuing thing. And then on the market side of the business, we are super focused in terms of trying to look at niche products, right? Securitization is still very nascent in India. Super focused on that as to how we can build up capacity and create more and more of those structured transactions in the market. So that's going to be a big focus. Commercial real estate is only becoming relevant in India today. These are all big businesses for us globally. We are just trying to bring in best practices. Risk management in the insurance segment is again becoming quite active in the market. So these are some of the big ticket items that and then credit trading, because credit trading is very common in most of the developed and other emerging markets. It's still nascent in India, and we are trying to create that capacity in the country. So that again is going to be a big focus area for us. Payments, digitization is always going to be there. Structured trade, we have got a big advantage. We will try to build in. As companies want to become more efficient and look at balance sheet light structures, we provide a lot of structuring solutions to help them achieve that. So that is going to be a continuing thing that is going to play out. Risk management, frankly, since financial crisis has been a little low from a priority perspective, but companies are trying to look at opportunities to take advantage of risk management. So that again is going to be focused. So I can keep going on and on, because there are so many pockets of opportunities that we are very focused on, and we have created a niche in each of those, which we will try to drive as I go through.
Bala, thank you very much. Thanks for your time.
Pleasure.
Thanks.
It was a
Thank
great.